ARK Invest has been on an absolute tear lately. ARK, their flagship innovation fund, is up by over 40% in the last 3 months, and up 12% this last month alone. But Cathie Wood has made some very questionable trades along the way, including selling out of Nvidia right before its massive run-up. So the real question is, if she is selling Nvidia, what the heck is she buying? Let's look at a few clips of Cathie Wood explaining her biggest buys and sells, and we'll use my handy dandy ARK Invest trade tracker to check them all out in detail. And don't worry, I've taken out all of the ums and ahs and cut all of these clips down to just the most relevant parts. Your time is valuable, so let's get right into it, starting with this clip from Cathie Wood's recent interview on CNBC's Tech Check.
The ETF hit an 11-month high today. Take a look at that chart. Outperforming even mega caps like Microsoft, Alphabet, and Apple, fueled by top two holdings, Tesla and Coinbase, which have doubled this year or more. But, and this is a big one, that marquee ARK fund missed out on that jaw-dropping rally in Nvidia, which she exited entirely in early January in that flagship fund. Let's get an inside look. Joining us now is Cathie Wood herself, CEO of ARK Invest. Let's start with Nvidia. Walk us through that decision, that process, why you judged that name to be overvalued right as it was taking off.
Yeah, so we started our research on artificial intelligence, actually when we were studying the possibility of autonomous vehicles way back in 2014. Nvidia at the time was $5. That's on the split basis, $5. Now it's closing in on $450. So we rode it all the way up until mid 300s, mid to high 300s in the flagship. Sold it because we saw the inventory problem brewing. That was a good call. Got back in the fourth quarter when it cratered. And then it just took off after ChatGPT, while all of our other stocks, many of them AI driven, I would say most of them actually, were still very, very weak. Mm-hmm. And just to give you an example, Nvidia was at 25 times revenues, while Twilio, which we think is going to be a huge beneficiary of AI, was at 2 times revenue. So we were making a valuation judgment call. We had done very well, 5 to 350 to 400. And we also kept it in our more narrowly focused portfolios, but took profits there as well.
All right. So here's that massive sale in Nvidia that everyone is going on about. Cathie Wood has sold a little over 27% of her shares in Nvidia over the last quarter, and it's gone up a whopping 70% over that same time frame. She's actually cut her Nvidia position in roughly half since the start of the year, but Nvidia has more than tripled in price over that same time frame. The important thing to note here is that Nvidia is still ARK Invest's 26th biggest position overall, out of about 130 stocks. They still hold about $130 million in Nvidia, which is way more than the other stocks that she's been selling out of. So it's clear that Cathie Wood is using Nvidia stock as more of a cash position now and selling it to buy other stocks that she feels are undervalued. But what stocks are those? Well, if you go by total increase in share count, the stocks that she bought the most of are SoFi, Moderna, Meta Platforms, and The Trade Desk. Cathie Wood more than doubled her shares in SoFi and increased her stake in the other 3 by around 70% each. But remember, there are 2 ways to grow a position. The first is buying shares, and the second is not selling those shares as the price goes up. So if you go by total increase in position size instead of by share count, ARK Invest's biggest increases are SoFi, Quantum SI, which I just covered in a recent episode, Recursion Pharmaceutical, and Meta Platforms again. And speaking of which, did you know that Meta Platforms just had an incredible earnings call? So one thing you'll want to pay attention to now is Meta's analyst ratings, especially how they've changed after earnings. 92.5% of analysts still have Meta as a buy. You can also see those analysts' target price predictions. Looks like the average price prediction for Meta is around $376, and the highest is a whopping $435 per share. So Meta still has a potential return of about 34% from here. And if you're curious, you can dig into each analyst's success rate, return on investments, and even subscribe to them and receive alerts whenever they issue a new rating. For example, I follow Justin Post of Bank of America Securities. He's got a pretty solid track record. Features like these are why moomoo has over 20 million advanced investors on their platform. And if you sign up right now, you'll get up to 15 free stocks, each valued at up to $2,000, and a $50 cash reward. plus a free share of Tesla or Expedia when you deposit $5,000 or more. All you need to do is download the app using my link, keep your funds at that level for at least 60 days, and enjoy up to 16 free stocks. But this offer ends soon, so make sure to get started today. Alright, the real question here is, why is Cathie Wood buying so much Meta platform stock? Isn't ARK Invest supposed to be avoiding big tech companies and focusing on the companies disrupting them? Well, I think I found the answer.
Who are going to be the winners in AI? It is going to be companies with visionary managements, good distribution, global in this case. And we think the secret sauce and the real beneficiaries of AI are going to be those with proprietary data.
If you are looking at companies that have proprietary data, why wouldn't you look to the big tech companies? Who's got more data than Microsoft, Amazon, Google?
Well, I think that they certainly have a lot of data, but I think that there are some disruptive forces at work. Take ChatGPT. I mean, that could harm Google mortally. It's either the worst thing that's happened to Google or could be the best if it's lighting a fire, but its advertising model is potentially at risk as ChatGPT disintermediates search. Amazon, ChatGPT like that can disintermediate Amazon and just take you to that site and order directly. So there's a little bit more disruption, I think, in the Magnificent Seven than many people understand.
So ChatGPT poses a threat to the fundamental business model of some of the biggest companies on the planet. The main way that companies like Google and Amazon make money is by showing users many different answers to something that they searched for. But ChatGPT and other AI chatbots can just give you the answer directly, refine that answer as you give it follow-up prompts with new information, and even take actions for you like booking a restaurant or buying something online. And just like Google and Amazon, Meta Platforms does have a ton of proprietary data. But unlike Google and Amazon, ChatGPT isn't really about to disrupt the business models of Facebook, Instagram, WhatsApp, Oculus, or Threads. This is actually a trade that I'm surprised more people aren't talking about. Yes, Cathie Wood did sell some of her shares in Nvidia, but Meta Platforms has been on an incredible run as well, and they're much lower risk now that they're not burning billions of dollars a year developing the metaverse. And unlike Nvidia, they're primarily a software business. Here's why Cathie Wood thinks that's so important.
I want to go back to Nvidia, though. So what makes you think sort of an Nvidia at the time was overvalued when you have, Zoom video, for example, a call that it could reach $500 billion?
If you look at NVIDIA, it is one of the Magnificent Seven. It is an easy way to put money to work. And the excitement around ChatGPT was such that this was the obvious play. It has been the check-the-box AI company for a while now. And rightly so. It has done an amazing job. We think it will face more competition than many people expect. We know AMD. We know companies like Tesla. Tesla has designed its own AI chip. Meta Platforms, own AI chip. So Google, same, own AI chip. So it doesn't have the market to itself like I think people think. And it's priced as though it is the one beneficiary out there. If you look at all of the stocks in our portfolio, the companies have proprietary data that no one else has.
So, Cathie, is this as good as it gets for NVIDIA, or are you looking for an opportunity to pick back up some shares?
Sure. If it were to correct, it goes through these massive corrections around inventory gluts and shortages. And yes, we certainly would. But understand, it is a well understood play on AI at 25 times revenue. NVIDIA is focused on hardware. For every dollar of hardware, AI will pull through probably $8 of software. So again, NVIDIA, really important cornerstone stock, has from $5 to $450 done a lot of work. Now people understand it's out in the open. It's not the hidden gem that it was.
So AI is going to generate about $8 of software revenues for every $1 in hardware revenues. That's a huge statistic to keep in mind. And that's one reason that ARK Invest focuses so much on software as a service companies as opposed to flat out hardware platforms. Even when it comes to companies that are building hardware platforms, Cathie Wood is betting on the software services built on top of them. For example, Tesla's full self-driving software. Square's entire software ecosystem for merchants and vendors, and Roku's operating system for TVs and so on. These are the same kind of stocks that Cathie Wood has been buying with her profits from Nvidia stock. Alright, but now that we can see just how much Nvidia stock has skyrocketed over the last few months, I think it's fair to ask whether Cathie Wood regrets selling it so early, and if she'd do anything differently if she could do it again. Well, here's what she had to say.
Any regrets over the last few years, a trade that you missed or made that you regret perhaps?
I think, and many people will say, oh, you must have regretted missing Nvidia as you did, Deirdre, up front. Actually not. You know what we moved into? More Tesla, more Coinbase. Those are up as much as Nvidia. So I'm a portfolio manager. We're managing a portfolio. And when we see one valuation skyrocket and other valuations that should be responding to the same thing, artificial intelligence, getting crushed, we know what to do with that. So I don't regret it. What I wish that the media had focused on is how loud we were about Nvidia starting nearly 10 years ago in 2014. We said Nvidia, every time we came on your show, Nvidia. When it moved into...
That's fair. You wrote it all the way up.
I do think that the mainstream media in general, and CNBC particularly, does a pretty bad job covering ARK Invest fairly. Don't get me wrong, there are a lot of things that we can criticize about some of their research, their stock picks, and even the timing of some of their trades. But one thing we should never be doing as investors is dismissing it when somebody makes a boatload of money. And that's exactly what Cathie Wood has been doing with Nvidia stock, and Coinbase stock before that, and Tesla stock before that. We should always be making data-driven decisions. And the best part is, ARK Invest publishes their research and their trades for everyone to see. So now that I have my ARK tracker back up and running, I'll be covering both of those things more often. Then everyone who watches can decide what to do with all that information for themselves. Buy the stocks, short the stocks, or use their research to find new stocks altogether. And if you want even more science behind the stocks, or you just want access to my ARK Invest tracker for yourself, I'll leave a link in the description below for you to get it. It's completely free and it updates itself every time ARK Invest publishes new trades, so you don't even have to wait for me to cover them in a video. And if you feel I've earned it, consider hitting the like button and subscribing to the channel. That lets me know to put out more research like this. Either way, thanks for watching, and until next time, this is ticker symbol U. My name is Alex, reminding you that the best investment you can make is in you.